An ELSS is a diversified equity mutual fund with stocks accounting for 65 to 100% of the fund's assets. An ELSS fund's returns are based on the stock markets because it is an equity fund. An investor can benefit from both capital appreciation and tax benefits by participating in an ELSS fund. This type of mutual fund has a 3-year lock-in term from the date of purchase. This implies that if you establish an ELSS systematic investment plan, each of your investments will be locked in for 3 years from the date of purchase. After 3 years, investors can sell their ELSS. Benefits of an ELSS fund. Savings on taxes. Under Section 80C of the Income Tax Act, an amount invested in an ELSS fund is eligible for a tax deduction up to 150,000 rupees in a financial year. This is the only investment option that allows investors to save money on taxes while still receiving excellent returns. The option with the shortest lock-in duration among the available tax-saving alternatives. The lock-in period for ELSS is only 3 years, compared to a minimum of 5 years for other tax-saving choices. In compared to other tax-saving choices such as 15 years in a PPF or 5 years in a fixed deposit, this term is the shortest. As a result, ELSS has the best chance of generating better returns with the shortest lock-in period. Gains are tax-less. An ELSS fund must be held for a minimum of 3 years. According to income tax legislation, any gains from the sale of ELSS funds are considered as long-term gains. Gains in excess of 1.0 lakh rupees will be taxed at a rate of 10% under current legislation. Short-term capital gains, on the other hand, are taxed at a rate of 15%. As a result, ELSS funds automatically result in decreased tax bills. Compounding's advantages. It is typically recommended to invest in equity funds for a period of at least 5 years. By default, ELSS funds provide a disciplined long-term investing due to the lock-in period. This technique allows investors to profit from the long-term power of compounding. After 3 years, redemption is not required. After a 3-year term, ELSS funds are not required to be redeemed. It is merely a short-term investment. There is no time limit on how long you may invest. ELSS should not be used just for tax savings. Instead, they should be invested for both tax savings and wealth growth. ELSS funds can provide much higher returns than other tax-saving choices, thus they should be considered for long-term financial goals. Increased profits. ELSS funds have better returns, 15 to 20%, than other tax-saving solutions since they invest in equities, generally, 7 to 10%. The benefit of compounding, along with returns from equities, delivers better returns for investors over a 3-year period. Returns on ELSS are typically in the region of 15 to 20%. This is the highest among alternative tax-saving options, such as PPF and 5-year FDs. Option for SIP is available. Investors can select between the SIP and lump sum options while investing in ELSS. SIPs allow investors to invest a certain amount of money from their savings on a regular basis, usually once a month. SIP offers several advantages, and it is suggested that you invest in ELSS funds using this method. Safe, simple, and clear. Investing in mutual funds is simple and straightforward. SEBI regulates mutual fund businesses, and they are required to make certain disclosures.